for high-quality economic development. reductions in an orderly manner, yielding relatively positive results. Previously, mortgage loans were adjusted with reference to the LPR, with a uniform policy floor applied across the country. However, under the new mortgage policy launched on May 17 this year, the floor has been removed. As a result, the interest rates on new mortgage loans have been further reduced relative to the LPR. This significant decline has further widened the interest rate spreads between the new and the existing mortgage loans, particularly in major cities such as Beijing, Shanghai, Shenzhen, and Guangzhou. In this context, the PBOC will guide banks to conduct batch adjustments to the interest rate on existing mortgage loans, lowering it to a level close to the newly issued. We anticipate the average reduction to be approximately 0.5 percentage points. We use the term average because loans are issued during various time frames and the interest rates on existing mortgage loans vary across issuing periods, regions, and banks. This is why I say the rate of decline is an average number. Banks reducing the interest rates on existing mortgage loans can significantly lower the interest expenses for borrowers. We anticipate that this policy will benefit approximately 50 million households and 150 million individuals, leading to an average annual decrease in interest expenses of around RMB 150 billion for households. This reduction is expected to stimulate consumption and investment, while also contributing to the decrease in prepayment. Furthermore, it will help compress the space for illicit refinancing of existing mortgages, thereby safeguarding the legitimate rights and interests of financial consumers and contributing to the stable and healthy development of the real estate market. This document will be officially released soon. Given numerous borrowers involved, banks need some time to make necessary technical preparations. Moving forward, we are also considering guiding commercial banks to enhance the pricing mechanism for mortgage loans. This will allow both banks and customers to make dynamic adjustments through independent negotiations based on market-oriented principles. The second policy is that a minimum down payment ratio of 15% now applies to both first and second home loans. In order to better support the rigid demand for housing and the needs to improve living conditions of urban and rural residents at the national level, second home buyers will no longer be discriminated from first home buyers when applying for residential housing loans, with the minimum down payment ratio of 15% applying to both types of buyers. On May 17th, the minimum down payment ratio for first home buyers was lowered to 15%. While that for second home buyers stayed at 25%, and from now onwards, the two will share the same ratio of 15%. I would like to specifically mention 2 points. Firstly, the local authorities may adopt city-specific policies, independently choosing to differentiate or not the first and second home buyers, thus setting the minimum down payment ratio within their jurisdictions. Since China is a large country, the real estate markets of different cities and regions vary greatly, so local governments may adopt differential policies to determine the minimum down payment ratio within their jurisdictions based on the floor set at the national level. Secondly, commercial banks may negotiate the specific down payment ratio with their clients, according to the risk profile and willingness of the clients. Since 15% is the floor for the down payment ratio, commercial banks may ask for a higher down payment after evaluating the risk of the clients. Or the client may be wealthy enough to offer a 30% down payment on the house. It depends on the market-based negotiation between commercial banks and individuals. The third policy is to extend the period of 2 policy measures on real estate financing. Previously, the PBOC and NFRA launched together the 16-point plan and policies on commercial property loans, which have played positive roles in promoting the stable and healthy development of the real estate market and in diffusing risks in the market. Among them, some temporary measures, such as the rollover of outstanding loans of property developers and commercial property loans, should expire on December 31, 2024, according to previous policy design. We have made the decision together with the NFRA this time to extend the 2 policies from December 31, 2024 to December 31, 2026. The fourth policy is to improve the central bank lending for affordable housing. On May 17, the PBOC launched the central bank lending for affordable housing with a size of RMB 300 billion. We guided financial institutions to support local state-owned enterprises to purchase those completed yet unsold housing at a reasonable price based on market principles and the rule of law. The purchased properties shall then be resold or rented as affordable housing. It was an important measure to reduce the housing inventory. To further enhance market-based incentives for banks and the acquiring entities, we have increased the proportion of funds provided by the PBOC from 60% to 100% for the facility. For example, previously the PBOC was to provide RMB 6 billion for RMB 10 billion loan granted by a commercial bank, whereas now the PBOC will provide low-cost funding in full amount to speed up sales of commodity housing stock. The fifth policy is to support the purchase of property developers' land inventory. Apart from spending the proceeds of some local government special bonds on buying the land reserves, we are studying on allowing policy banks and commercial banks to lend to qualified enterprises to acquire the land inventory of property developers based on market principles. It is to activate the inventory of land and ease financial strains of the property developers. When necessary, the PBOC may provide support through central bank lending. We are studying the policy together with the NFRA. Thank you. Thank you everyone for watching. If you like this video, please remember to like and subscribe to our channel. See you next time.